No, I'm not a conspiracy theorist, but I have been saying for the past year and a half that that was what was going to lead to what we just saw over the last, say, 3, 4 months. And I think that that's what happened. We saw by last spring, we saw the market come to terms with the fact that there is not enough silver out there, and that the only way we would get silver coming, any kind of even minimal relief was private holders selling it back into the market. And I said that wouldn't happen at $40 or $50. It was going to happen at $70 or $80. And to some extent, that started to happen. But what's interesting too is that there's all kinds of bottlenecks in the system. First of all, like you say, there's only so much silver on the major exchanges. For the most part, they've all been drained. We can see some of it's flowing into the silver ETFs. We've seen that SLV kind of bottomed. I think it was by the middle of 2024, and it's been trending up pretty strongly since then. And globally, silver ETFs have reached their previous peak, but the SLV has not. So what it suggests to me is that in the West, we haven't been participating quite to the same extent as they have in the East. There's been a ton of Chinese buying. They like to gamble. It became very speculative, and I think that's a lot of what contributed to this huge run up to, eventually $110, $120. But so, it's kind of moderated now. I think we are in a bit of a consolidation phase, but none of the drivers, none of the fundamentals, and none of the economics, the macroeconomics have changed one bit. They've only gotten sort of more bullish. So I think we're heading higher from here later this year. Silver is not easy to come by, and if you've got big industrial consumers who are finding every possible way to get their hands on it, and if some of it is by holding long contracts, futures contracts, and waiting for them to mature to take delivery, and at some point one of the major exchanges, I think it's maybe unlikely to be the Shanghai because it's built to be for delivery, whereas the LBMA and the COMEX are not. I'm not an expert in these markets, but that's my understanding. That it could be one of those two that fails, so to speak, and someone stands for delivery and they're told, sorry, force majeure, we can't deliver, we don't have the silver, we'll settle you in cash. And they'll say, no, I don't want the cash, I want the silver. And that's when we're going to really hear that. And that could be, sort of the last straw. But you're right. The industrial demand is what has been, I think, essentially providing this rising floor under the silver price. And it's the physical, or I should say the investment demand, that really has come in a big way and has in the past been what has caused these spikes. I'm not even sure if this last spike was not a bit of both. I would think it was mostly investment that really caused it, because that's sort of, fast, I'm going to say dumb money in some ways. And people get caught up in this stuff, and they just feel like, oh, I'm going to miss this boat. There's a lot of FOMO, and then they just keep buying and buying and buying, and then there's no one left to buy. And the smart money knows that it's going to correct. But yes, I think that can be a risk. The Silver Institute said that over the next 5 years, they expect ongoing deficits, and that we will actually see a new record deficit in the silver market. So it's not going away, and none of the projections I've seen for new supply coming from miners gives me hope for anything more than 1 or 2% growth in mine supply per year. That's nowhere near what the market needs. We're in a deficit of anywhere from 10 to 20% of annual supply. We're consuming 10 to 20% more annually than we get from mining and recycling combined. And, Steve, I was looking at, there was an update from the Silver Institute back in November. So they put out their numbers every year, and that usually comes out in April for the year. They project what they think will happen for 2025, the last time around, the World Silver Survey. And then when November runs around, as most of the year has gone by, then they update their projections, and hopefully they'll end up being a bit more accurate. Well, what's interesting is that they show net investment in silver ETFs as a separate line item. So they show it separately from what they call the market balance, meaning surplus or deficit for the year. So what's interesting is that if you look back at the April survey, they thought that the investment into ETFs was going to be somewhere around 70 million ounces. And I remember saying at the time, that looks really wrong to me. I don't see that happening. I think we're going to see a lot more money flowing into the investment side of it. Obviously, some of it's physical, coins and bars, but some of it is into the ETFs that hold a physical. And it turns out that when they redid their estimates for 2025, that the flows into ETFs was going to be more like 200 million ounces. That's almost 3 times what they expected originally. And if you look at the market balance, including investment into ETFs, their estimate for 2025 is going to be an all-time high deficit. So this is a really, really tight market. And I don't see that improving. So the support for high prices is absolutely there. It's easy to look at a stock and say it's at $10. It's got a certain value, and it's hard to understand that if it's at $40, that it could actually be cheaper. But the way that we determine if it's cheaper is based on cash flows and profits. And what's interesting and what's important to keep in mind, and that's what I talked about at VRIC last month, is that analysts are not yet using, current silver prices. Up until a few months ago, they were using, if you look at the average of maybe the couple of quarters before, they were probably somewhere around the $25, $30, $35 range. They were a little bit generous, 40. When they start to revalue their models, they'll probably be more at maybe 50 or 55. We're at $70, $80. So the point is that I think what happens is when these silver producers report, they're going to be reporting their actual sales and their actual profits. They're not going to say, well, we sold at estimate prices. They sell at market prices, average market prices. So last quarter, this quarter, next quarter, very likely these sales are going to be in the 70, 80, maybe higher dollar range. And their all-in costs are, you could argue, somewhere around, believe it or not, they've actually gone down. So for many, somewhere around the $20, $25 range. And they've gone down because 3/4 of silver is produced as a byproduct. So if you've got a mine that, let's say, produces silver, and the other way around, if it's a mainly silver mine, but it produces byproduct, those are often used as credits and against the cost to produce the silver. And if those metals go up in price, that means you have even bigger credits against your production cost of silver. So your costs actually go down, and your revenues have gone up because the silver price has gone up. And I don't believe most of this has gotten priced in yet. We're going to start to see this happen, I think, over the next few quarters. And I think that's when the market's going to come to terms with that. And we're going to see, like you said, this $40 stock that is actually cheaper, because at $40, the share price has not kept up with the increase in profits. That's the easiest way to put it. We've seen that with silver, we've seen it with gold, and so their actual valuations have gone down, believe it or not, with the much higher metals prices. So I think the story has been silver for the last sort of year and a half. I think the next opportunity in silver is going to be the miners over the next couple of years.
China's Seoul Silver Futures listed open-ended fund dropped 31.5% after a sudden valuation methodology change tied to extreme global volatility. The adjustment pushed net asset values far beyond Shanghai's 17% daily limit lower, triggering trading halts and more than 17,000 complaints. The fund manager has now announced a compensation plan, fully covering small losses and partially reimbursing larger ones, in an effort to restore investor trust amid allegations of unfair advantage and short selling ahead of the reevaluation. Quick comment. See where it says a sudden valuation methodology change? That's when they halted the fund amidst the sell-off, because the Shanghai futures sold off more than 17%, but you couldn't trade it down more than 17%. It was only down 17% and stopped. Global silver was down 25, 28, 30